Hey guys, hope you are all having a great day. Today we got our cheeks clapped into oblivion again, with the markets sinking well below what analysts expected. Today we got some pretty big news in regard to crypto, with the American government intending on trying to regulate the market. For some reason, their failure to provide retail traders a safe ground to invest in somehow invigorated their confidence that they can provide proper protection for everyone in crypto. I also want to talk about perspective on the market and give some insight into a couple of things. I also want to talk about the ruling of the SEC that passed yesterday. I want to thank everyone who decided to join my open Discord. If you missed it, I left a link in the video description and a pinned comment. Before we start, let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. All efforts are aimed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive right in. Before we begin with the markets, let's quickly talk about the crypto, because the news regarding this is actually insane and will affect stocks from here on out. The current administration is preparing to release an executive order that will require federal agencies with the duty to regulate digital assets such as Bitcoin and other cryptocurrencies as a matter of national security. Expected to come within the next couple of weeks, this memorandum would task the government with analyzing digital assets and assembling a regulatory framework that covers cryptos, stable coins, and NFTs. The administration is also instructing agencies with harmonizing regulations of digital assets between countries, with the reasoning being that because digital assets don't stay in one country, it makes it necessary to work with other countries on synchronization. Now, let's stop for a minute and be realistic. It is obvious that no politician can completely regulate crypto. You see, there are trillions of dollars in market capitalization, and now that big investors such as JP Morgan, Goldman and others are investing in it, the government wants to add more protections for the big players, who will undoubtedly start gambling people's pensions in the markets. What is happening is they are slowly setting things up so that they can build a better market on it for themselves, and most importantly, so that they can make new laws that will target coin owners with higher taxation levels. The government doesn't like it when the poor starts getting even with the giants, and so they pass down laws that stunts their growth as much as they can. But there is more to this. The timing of this is of no coincidence. I have made morning videos on this before. What is happening is that the government is simply trying to build the framework so that they eventually release the Fed's digital currency, which has been on the works for a while. Bitcoin and Ethereum are in my opinion way too big to fail at this moment, and people are funding their IRAs with crypto, with banks adding more exposure to this market. The problem to them right now is decentralized finance, which I made a long video about once. Decentralized finance can and will return financial stability to the masses through smart contracts. Take a step back for a moment and imagine getting a decentralized loan with a very small interest for everyone. Why would anyone ever do business with banks again? They want to keep the system the same as much as possible by attempting to regulate this so that later on they can pass the Fed coin. We have seen people using decentralized exchanges, and they are growing a lot. Less people are confident and trusting of the government. I think that the government could try to impose restrictions in cashing out, which would be the real issue here. So far, nothing big has happened, but they are slowly moving to shift things to their favor. I think they are too late though, as this grew way too fast and too long for them to now catch up and attempt to regulate it. I think they will only be able to regulate centralized exchanges, but it's impossible to regulate a decentralized exchange, since any measure against it would actually violate a person's rights. I made a big video on this a while back. Now, on to the markets. Wall Street's major indexes closed in negative territory again on Thursday even after the U-turn they had earlier. The fall in Tesla's stock value dragged the Nasdaq to closing 1.4% lower. S&P 500 shed 0.54% and the Dow Jones ended below the flatline. Tesla started falling hard today, closing 11.55% down, and it really had a compounding effect on a lot of the indexes, who began dragging everything else down. Let's talk about the market, so sit back and pay attention. The reality of things is that this is a serious correction that was way overdue. The markets, as well as the Fed, treated pandemic-driven inflation as a little joke, as nothing to really worry about, and acted like nothing in the world was happening. I made a billion mentions of this on my channel, often characterizing the events as a divergence between real value and price of underlying assets. Because the gap between these two grew too fast, they have been pulled back, which is what we are seeing. This pullback will have multiple phases of going down, So if you think this is the type of event where everything falls and then quickly bounces up, think again. We are going to fall and then bounce and fall and perhaps move a little higher only to get back below and break previous support. It's not going to be anything super crazy, but it's going to sting and we are all going to feel it. The denial of the markets towards inflation is hurting us all, and you can thank both administrations for it and most importantly, put it on Jerome Powell as well, whose brilliant strategy to isolate Wall Street from these issues has us pinned down here where we are at. The consequence of these actions will be reflected on the stock market for a short while, so don't get all depressed about it. However, there are implications that markets did not account for earlier that they are now being forced to contend with. For example, a large amount of people between the ages of late 20s and late 40s to grown covet to owning things like houses and cars, yet stocks and even real estate securities continued to make record numbers. Now we are seeing that they cannot back their value so high when there is less demand for these things, since younger people are giving up on the idea of buying houses since they know it will be almost impossible to achieve. The denial of the markets with the pumping by the Fed at the orders of Jerome the Joke Powell have us facing a reality check now. And in these moments, you can make some serious gains. Pretty much every stock is way undervalued, and meme stocks and blue chips are all at a special discount. Once we get back to where we were in early December before markets took a hit, you will easily gain 30% back in pure profit just by catching up to where prices were. Signals in the market are all screaming buy, and we know this isn't a market crash because investors everywhere are incredibly bullish about buying everything right now. Though price-wise this is a bear market, bull mentality is more optimistic than ever before, mostly because economic indicators point to a recovering economy that is successfully adapting to the changes of the pandemic. Enjoy the depths of this trash market, because they will not be long-lived. Lastly, I want to talk a little bit about the SEC and the new measures that they passed to increase visibility into private equity funds and some hedge funds. In the 3-to-1 vote to issue the proposal, the change will increase the amount and timeliness of confidential information. This is to allow regulators to better understand the operations and strategies of private funds. They want to better assess systemic risks and increase oversight and investor protection. It has been noted that private equity was not happy about these new changes, which should not be surprising in the least of manners. The new rules will force funds to notify the SEC of certain event 1 business day after they are taken. This was a huge victory for us retail investors. The SEC is also working on a plan to require more private companies to routinely disclose information about their finances and operations, and even increase the information that non-public companies must file with the agency. I want to thank SEC Chairman for overseeing this getting passed. I wish him the best of luck in his continuation to try to bring more oversight to private equity. I know we have our differences in many regards, but I am a fair person and I will always give credit where it's due. Let's now talk about today. The Fed submitted over $1.613 trillion in reverse repo operations today. Dark pool trades for AMC accounted for 55% of the total volume today, while dark pool trades for GameStop accounted for 53% of the total volume today. AMC had a larger amount of buy orders than its sell orders, with GameStop also having a larger amount of buy orders than sell orders. Now, let's talk about performance. AMC traded bearishly, losing over 9% for the day. It began trading fairly neutral during the pre-market. It would trade right on the VWAP, constantly moving above and below the line. Upon market opening, after a double bottom, AMC began moving upwards, eventually peaking at 18.16. It retraced back a bit and attempted to break above the 17.80 resistance line twice. After the second failure to break past it, AMC began dropping, and it continued doing so until it closed at 14.52, below the VWAP. As for what to expect for tomorrow, it is impossible to determine where AMC will trade. So many changing variables with a volatile market make it incredibly difficult to project probability of any kind. AMC wanted to recover again today, but it failed to do so because market conditions weighted heavily on it, and with the added strain of shorters compounding the negative effects of the market, AMC got slayed today. GameStop traded bearishly, losing over 9% for the day. It began trading fairly neutral during the pre-market. Upon market opening, GME fell from 106 to 103.68. It actually bounced back above 106, but this victory was short-lived, as GameStop had a massive drop all the way to 96, where it found a modicum of support, but even that wasn't enough. GameStop slipped once again, this time going under 94. After a small bounce that had it test a resistance wall at 99, GME dropped again, this time reaching a low of 92.89. It barely bounced up at the end of the day, closing at 93.52, below the VWAP. Like I said, it is impossible to determine a good structure by which to make any projection based on current estimates. GameStop got absolutely destroyed today, and it was a bit shocking to see it fall in the dramatic way it did. I personally bought 50 shares of it, because I am not wasting an amazing sale like the one we had today. And that is all I have for you guys today. Thank you all so much for making it to the end of the video, and don't forget to come on over to my Discord. Let me know if you bought today's dip or if you were waiting to see if it falls any further. Thank you all for the love and support you have shown me. I hope to see you tomorrow on the next one. If you want to support this channel, I have a Patreon link in the description as well as some one-time donation links for Cash App and PayPal. Thank you again for being a part of this channel. I will continue striving for better content. Enjoy the rest of your day, keep on buying the dip and to the moon.